All right. Hi, thanks for joining us today for another Financial Symmetry market update. My name is Grace Cavantis, and I'm joined by Mike Eklund. And today we'll be going over some slides to hopefully give you a little bit of information about what's been going on in the markets and maybe what's to come. Just as a reminder, this is not investment advice. This is for information purposes only. With that, Mike's going to get us started with a summary of what's been going on in the markets.
Thanks, Grace. Yeah, and thanks everyone for joining us again. This is an update of what's occurred over the last 1, 5, and 10 years. You'll notice we don't show quarterly results, and that's on purpose because we want to make sure people focus on the longer term. But in the reality, as you see here on the screen, the last year has been very good for U.S. stocks, up almost 30%. And international markets have done well as well, up 8 to 15% between the emerging markets and international developed. And then bonds, U.S. bonds, about a little less than 2%. Looking longer term, and we'll talk about this as well as we get to future slides, is it's been very strong return for U.S. stocks. So one might ask, why invest anywhere else, including international as well as bonds? And we'll talk about that and the reasons why in future slides also. But overall, the last year has been very strong for investors in general.
It has. And most people know that average market returns have been about 10% per year. But the past 2 years are a good example of the fact that there's pretty much never been a year where the actual return was 10%. So, for example, in 2022, things were down about 25%. And then in 2023, they were up 30%. So that's something to keep in mind as you think about investing. Fortunately, historically, about 75% of years, stocks have been positive, not negative, and that goes back to 1926. And so we see that there are large swings over time, but overall the average is about 8 to 10% per year.
Great. Thanks, Grace. The next topic we wanted to mention, obviously this is a presidential year, so there's a lot of conversation of the election. We're not going to get political, or we don't believe you should get political with your portfolio. And so what this slide is showing is that stocks have had positive results, no matter if there has been Democrats or Republican as president. And so, we'll have future slides on future webinars on this topic, but we don't think you should make changes to your portfolio based upon who is elected in November.
Thank goodness, because that would be tough to predict. All right, this next slide shows us the historical performance of U.S. stocks compared to foreign developed stocks. The gray sections you'll see are when U.S. outperformed international companies, and then the purple is when international outperformed U.S. And what we can see here is that it goes through cycles, times when one outperforms and then the other outperforms. And we can also see that lately U.S. has outperformed and for longer than average. As reminders, China really dominated the markets in the 2000s, and Japan really dominated in the 1980s. And we're seeing that in the US right now. So these cycles are normal, and it's a good reminder that international diversification is a prudent way to reduce risk in your investment portfolio.
Well, thanks, Trace. And this is, as a reminder, this is why it's so hard to invest, because everyone just wants to invest what's based on what has done well recently. Mm-hmm. But as this graph shows, that sometimes is not the best fit because it tends to go in these cycles where what has done well recently moves to, something else soon. So yep. Once again, diversification is your best friend.
Correct.
This next slide is talking a little bit about the, interest rates are much higher today than they've been over the last few years, which is great for savers and people with money in the bank account. But we don't think that should change your investment approach or your stock allocation. What this slide is showing here is on the left-hand side is that stock returns when interest rates are low are still on average high, or a little over 11% on an average on an annual basis. And even when interest rates are high, like today, stock returns are still high. They're actually a little even higher, 12.4% on an average basis. So it's a reminder that even with higher interest rates, you should not change your investment plan and strategy, as you still can receive, as we saw last year, very good stock returns. And getting to that point, This next slide talks a little bit about, a lot of folks say, well, why do you invest in bonds? As we showed on the slide 3 of historical results, the last 10 years have been really difficult, even the last 3 years for bond investors. But you look at the last 30 years plus, bond returns have more than doubled what money markets or cash or treasury bills have done. And that's the benefit of, you do get paid for taking some of that risk of owning those bonds that have longer maturity. And, a good example of this is during, 2008, interest rates were very high as well. But then the next, almost 15 years, interest rates were close to zero. But yet we had very strong bond returns during that time for those that invested in bonds in 2008. So it's another reminder in, combination of the previous slide on don't change your stock investment strategy because of higher interest rates. We don't think you should change your bond investment strategy as well. Because there is a benefit to the owning those intermediate term bonds.
Also a reminder, I think, for me and a lot of people, to not hold too much in the bank just because those interest rates look good.
Yes,
Currently.
exactly. Good point, Grace.
Yeah. All right. Well, just as in prior market update videos, we like to include a forward-looking return projection from other respected firms. So for this quarter, we've selected one from Vanguard. And this shows their 10-year forward-looking return projections, which Vanguard's been relatively accurate over the long term. So we like seeing what they're projecting. I want to remind you that this is no guarantee of future performance, but the analysis is rather in-depth and they do a lot of research. So we like to see what they have to say. And you can see here that there's projected to be good value in international and small company stocks, as well as US bonds. And as a reminder for you or for financial symmetry clients, your portfolios are a little bit overweighted in these areas of the market because of that. Overvalued markets, according to Vanguard, include US growth stocks like tech and high yield bonds. So financial symmetry clients likewise are underweighted in US growth stocks and don't own high yield bonds. This is part of what Mike touched on earlier that makes investing so difficult, because average investor behavior is to invest in what has done really well recently, in particular, because that's what's going to be talked about in the news and in financial media and by your friends. But we have to keep in mind that just because something has done really well recently does not mean they're going to continue to do well.
Great. Thanks, Grace. And as a reminder, this is Vanguard's forecast as of April 2024. And there's a link below if you'd like to read further information on their analysis. And then finally, we include this as well. Just a quick reminder, if you have questions on your investment plan or process, please contact your advisor. If you're not working with Financial Symmetry, you can contact us directly and we're happy to walk you through it. But in general, we customize our client's portfolio based on your unique situation. And to do that, we first develop an investment plan based on your financial plan. And then based upon that investment plan, we then implement it through picking the appropriate investment vehicles to help reach your goals. And then finally, I think most importantly, we also monitor the plan through opportunistic rebalancing and then adjusting the stock percentage based upon any kind of material life events. So this is our overall investment approach, and feel free to contact us if you'd like more information.
Thanks, Mike. If you have any questions, feel free to reach out to your financial symmetry advisor. We're happy to answer any questions as well if you're not a client. On the next slide, you'll see Mike's and my contact information. We'd love to hear from you if you have any future topics you'd like us to cover or any questions about what we did cover today. And lastly, thank you so much for joining us for another market update.